Good morning and welcome to another edition of Roadhouse Live. We are live. Today is June 14, 2023. Bender, we've had inflation data come out this week and there's no inflation, dude.
Well, that's
There's
good.
none.
That's good.
There's
That's
none.
good to know.
Yesterday you disagreed, but today they reiterated that there is none at all. I can get eggs for $1.50 a dozen.
That's what I was going to ask you. How?
Okay.
You know, this sounds a lot like when Biden made the comment that that inflation was zero, just because it was like zero on some stuff month over month, mostly because of the dropping fuel prices. But I don't know. It's like it's that where they drive shit up and then bring it down a little bit, and you're like, oh, it's cheap.
Look, what's the old Dire Straits song? What is it? Money is for nothing, chicks for free.
There you go.
It's like that. This is the world that we are in. You know, that's the world.
Mhm.
Money is for nothing, and the chicks are free. So it's like we're being a little bit facetious in looking at some of this data. It's like, so yes, inflation has cut in half, I think, off of its highs, right? So it's like awesome. Inflation is still 2 times what the Fed wants it to be. Eh. So it's like, oh, okay, that's cool. That's where we are, and it's like you look at it. A lot of this, you have to, and I don't know if the Fed does it or not. If anyone's looking at it, a lot of it has to. You go back and you correlate it to energy prices being cheaper. Energy being basically the number one component in pretty much everything. Whether or not you want to say, well, energy is excluded, it kind of isn't in a lot of ways, because it's like the price of petrol is in pretty much anything that you can think about or touch. So when you start getting into those pieces of it, as long as energy remains cheap, you can go ahead and get a move down in inflation as far as cost of goods to everything else, as long as you have cheap energy. Now you combine that with this whole new, and bear with me here, the Kathy Wood concept that technology is massively deflationary. And we're seeing this once again with the AI pump. Technology deflationary. And the companies that deliver that new technology and deliver that new services, they're going to benefit the most. So that we have that going back on the other side, with banks still lagging. A lot of sectors still heavily lagging, but trying to catch up. Today is the day, though. We get Papa Powell. The rate decision, I think, is going to be a rate decision unless they decide to absolutely bamboozle everybody that's basically placed bets and actually do a rate increase. You want to talk about, some volatility if they actually do a rate increase today, as opposed to doing the pause like everybody and their mother, pet canary, and Chihuahua believe that they will do. So with that being the case, it will go back once again to what is the messaging coming out of Powell? What is the messaging? Is he hawkish? Is he dovish? Is he does he have the somebody posted in Discord the GW moment where he gets on an aircraft carrier and says mission accomplished? So when you start looking at these things, it's like it's difficult to sit here in position for the moment if you're just looking at narrative. If you look at the chart, Bender, is there anything bearish on the chart other than it being on the top side?
No.
Is there
No.
anything bearish other than is like, wow, that's 5 straight weekly green candles that we're effectively putting in? Is anything bearish there?
No.
No. Yeah.
No. Hasn't
So
been
so
for a
the
while.
so okay, so we can create doom and gloom out of narrative if we want to, or we can take the Kathy Wood approach and be like, hey, this is the greatest innovation ever. Technology is deflationary. If you're not in tech, you dead. That's the way things are moving at the moment. Now let's go to the flow. Flow is saying that there's more upside, even though we have seen some pretty interesting downside bets. But a lot of that you have to go to when you have binary moments like today. That's going to be a big piece of the puzzle. That's going to be a massive portion of that those downside bets as far as hedging. That's why you get several $100,000 going into 6 cent contracts, playing the downside. Be like, so you can say like, wow, that's so much money, going into a 0 day, 6 cent contract, but you don't know what they're hedging. You don't know what they're trying to counter on the other side. So maybe that's like 0.02% of their overall picture that they're trying to protect. And so these little 6 cent contracts will do the trick if the bodies hit the floor. So Bender, I went through my part of it. There's really not a whole hell of a lot to talk about. Powell is the main event. Everything else is child's play. Not even the rate, unless they actually increase, which nobody believes that they will. Do me some charts. Show me what you got.
Do you some charts? All right. Here is a
Show
15
me
minute.
a fake double top. That's cool. What time today do we break it to the upside?
Exactly right. What I'm showing here, this is a 15 minute, and normally I'd go out to the daily, but I think we've covered that. We know where the lines are coming from. If I zoom this, if I drag this down, you can see this is that trend line we were talking about. That's kind of looming, I suppose, up here, trend line resistance. And then quite a bit higher, you have this old fair value gap, daily fair value gap sitting up here. This is kind of the top end of it. So that's what's, quite a bit higher. More near term, you have this pre-market high here, 44.28. We were watching this. We talked about this 44.23, 44.24 level. We talked about that yesterday pre-market. We traded up into it, did a 50% retracement off of that news candle low to where we consolidated a high before we consolidated. We came back, we retraced that 50% and got through it. So you can see this kind of shift in this area being resistance. And now they're trying to test it as support. So we'll see if this holds in here. You can see you've got this 15-minute candle here. This fair value gap currently acting as support. So I think, setting up the morning, I want to see if this area, if they can hold this in here. Maybe it comes down into this, 44.16 or so. Maybe it wants to take 44.13.25. And this is going to be kind of that level. If it comes down and tests this, this will be that. All right, let's see if it pulls below to take all this out and then, reacts to the upside. Or if it breaks this and it's unable to retake it, then we need to look at this, a retest of this level 44.0275. Gives you that 4,400 whole number kind of right in here. I think if we find ourselves below 44.13, I think we'll go take this out, that 44.02 half. If we're below this and can't reclaim it pretty quickly, then we'll likely take out that 44.02 half. Below that, I would say it gets pretty slippery down to this candle's low, that 43.80, 225. As far as the upside is concerned, again, we've got, we're currently sitting 44.20. We've got that pre-market high 44.28, and then we've got these extensions up here, 44.34.75, and then 44.40 half. That's, I think that's about it. Obviously, that 44.55 half, we talked about that yesterday. That was the top of that swing high candle before we started the latest sell. So that's what, 35 up from here. So kind of depending on, how the market wants to position for what's to be said, and how the market wants to react after. If we get any serious upside, these are the areas that I would be looking at. This trend line, which would come in about 44.44 and then 10 handles higher. But if it's going to make that move, it's likely to go take out that 44.55 half, that previous high that's been sitting out there. And again, on any sort of push, any sort of push down with momentum.
You keep on saying push down, like it's like that's
like
part
it
of
does
the
that.
game.
Like it's
no,
it's going to be
keep
a
on
thing.
saying it. It's like, look, we had a 3-minute candle that went down like what, 3 handles? Isn't that enough? That should be enough.
Yeah, I mean, here's what we can't do. Whether we're going up or whether we're going down, we can't just be comfortable and go, oh, well, it's just going to keep doing this forever. Well, yeah, until it doesn't, right? So, got to play out both scenarios.
You're doing a great job of playing out both scenarios, by the way.
Well, thank you. I think that's about all I got. I'm still keeping an eye on the Bitcoin chart here. We talked about this last week, it coming down and testing that 50% retracement. That's kind of what it's been sitting on here. It definitely, there was that, period we talked about, what, pre-market yesterday, when there was some divergence between what Bitcoin was doing. I think it was right in here. No, not right in there. This is a 2-hour chart. But we saw, right in here. We saw Bitcoin kind of coming down, and pushing up. The market's pushing up. So I'm still watching this. I kind of want to see how this plays out. I want to see if Bitcoin's going to catch up and catch some of this momentum, or if, the ES is going to pull back. Because every time I've seen these sort of diverge and pull apart, it's not too long before they kind of come back together.
Yeah,
we'll see.
It seems like just to a blind eye, if you will, like there's been a lot of like repairing with the dollar and Bitcoin in a weird way. It's like there's just seems like there's something going on over there, and that's just a little bit different. But I think you're talking about it right in through here when you talk about how it is disconnected and then it reconnects and it disconnects. I still think that there's a lot of headwind from the government as far as trying to crack Bitcoin, which is going to make it a little bit spooky for a minute. But yeah, thank you for continuing to post that.
I mean,
talk about it.
Just even with all the crap that has occurred, right? With whether it's FTX or whatever else it is, it's like, even with all that stuff, it tends to comes back together.
Uh-huh.
So it's like headlines are headlines, but at the end of the day,
headlines are headlines. The only thing I'll say that's different about it is crypto and Bitcoin, Ethereum, all the shit coins, they are an existential threat to government control and big banks.
So
Exit,
far.
exit. Well, not to the same. They're not really. It's like
I know.
not to the government yet, but it's like they are massive threats to the establishment as far as being able to have control. It's like you can't tell me that the Treasury doesn't sit there and look over at Bitcoin and look at, I'm putting in quotation, like the market cap of Bitcoin and be like, why don't we have control over all that money? Why is it over there? It used to be with us, now it's over there. It's like they're not, look, I don't have to agree with it or disagree with it, but until they're done trying to tear it down, it's a scary world over there. Very scary. And the government usually wins, especially when it comes to their money. All right. Thank you, Bender. Sonny, what you got, man?
Morning, everyone. Kind of light on the news. So start with upgrades. FOUR. We've seen some flow in that last couple of weeks. The other one was price target raised for Meta to 310 from 270 at Piper Sandler. Netflix raised to 375 from 250 at Barclays. AMD raised to 170 from 100 at Baird. LI, we had seen some deep in the money calls come in over the last couple of days. Like it's, I think, multi-million now, and Citi is saying that's a positive catalyst watch for them. So definitely something interesting. I haven't figured out what that deep in the money flow is for, what's going on there yet, but it's definitely on my watch. Downgrade side, not much on there except the Dash that I saw this downgraded to hold from buy, and nothing other significant that I see on there. In the news section, Discover Financial says credit card delinquencies and net charge-off rates continues to go up. We've seen some flow coming to Visa, MasterCard, something to watch. Rivian will lose its spots in the NASDAQ 100 index next week. Google News, so, we had talked about this. Europe Parliament is working on the draft for the AI rules they want to set for Europe. So they came out with their first draft, and they're going to hold the companies responsible that, how they train their AI models. They also have to disclose what they're using AI and design AI models, that in a way that it prevents from creating illegal content. Not sure how they're going to do that. And they would fine up to 6% of the global revenue if they're found to be non-compliant. So because of that, Google has delayed their implementation of their AI chatbot Bard in Europe. And also from Europe was Google, they want them to separate the ad tech business from everything else, because they think it's a monopoly and it could face up to 10% fine annual revenue. And I think that's one of the reasons we've been seeing Google lagging behind everything else. All the big tech going up. Starwood considers selling. Yeah, sorry, go ahead.
No, go. It's interesting seeing that, because does Microsoft not do business over there?
Exactly. For Microsoft, they're going after other things like Activision. We're not going to let you buy Activision.
Amazon doesn't do business over there. Apple doesn't do business over there. It's interesting that they want to play in directly towards. It seems like it's a Google headline every other day. I guess they didn't grease the wheels properly.
Yep. Yeah, and that's a good point that you raised. Like, okay, it's like Google, but it's like Google is the one also putting a headline that they're delaying this. Microsoft hasn't put out anything, or any other company hasn't put out, like they're delaying their implementation of whatever is going on. So it's like, they just pick a company, go after it, and keep generating headlines. So I guess they want to all buy up the dip and then say, okay, it's good to go.
Yeah.
Starwood Capital considering selling more than 2,000 single-family rental homes that they bought up during the pandemic. I think they're having the same issue that Zillow had and Redfin had, where they bought up a whole bunch of houses and they couldn't sell them or rent them out.
Who's going to buy them with rates being what they are?
Yeah. Yeah, they bought, like, all these hedge funds bought up a whole shitload of houses. And Boeing deliveries at commercial jets rose 43% in May. So this is just based on the monthly numbers that they put out. And, you guys know I've been in this July 7th, 245, 250 calls on Boeing. I sold a whole bunch. I'm just holding a couple of them now. If I get another dip, I'll buy more. That's about it from me.
All right, very good. Stonkington, Mr. Stonkington.
Hello.
How are you, sir?
Oh, yeah. I'm awake. I'm ready. Let's go. Let's do some sharing. And I'll just kind of jump right into it. Let's see. We could start with a little lesson from some of the OGs. This one came out from both Al Brooks and Trader Tom. This was a recommendation that was helping out, is just looking at these clean 10-minute charts. They both have said, they found they weren't making any additional money by using a 1-minute jerky chart, so they like to use a 10. And this is just the price action from yesterday. I've got the Russell up, got the NASDAQ, got the ES, and I'm going to be watching gold today. We've talked a few times about how that's historically something that the Fed, it likes to run on the Fed, and we're, already ripping there. But what are the things with these 10-minute charts? It's like one thing, if you took off the time axis and the price axis of a chart, you wouldn't have any idea. I could be showing you a 5-minute chart or a 1-hour chart. But what I like about the 10-minute is, like, for the open, you get three candles working instead of just the one. If you're waiting, on like a 15-minute chart for orb to set up, you already got a few candles there at the open. And then the other one is, like I mentioned a few weeks ago, Trader Tom and Al Brooks both liking just buying. They do buy on close, which is like a strong candle with a breakout to the upside. So they'd be like buying this bull candle yesterday where the Russell made a move. Just a strong bull candle that closes on its high, and then you would buy the break above that. Strong bull candle that breaks on it, that ends on its high, but break above that. Or then the other one would be, if you were Mr. T. This was one we were calling live in the room yesterday. Would have been this little fair value gap yesterday on the NASDAQ. I had a room right up to here on the 10-minute chart, so we had to push down, and then it left that little fair value gap, and you could see we just tried to push and rejected, and then we rejected there all day. So that's just something that's helping me. I figured I would share it really quick because it's just, with a 10-minute candle, you're like, all right, well, I got to wait 8 more minutes to see where this candle is going to close. So it just helped me with patience and entries and stuff. And it's just really easy to see. It's like, the first section of the day on the NASDAQ, it's like, if you were itching to get short, you just look at this, be like, hell no, that kind of thing. So just something that I would point out. If we jump over to, here's the NASDAQ on an hourly, got this kind of rising channel thing going on here on an hourly chart, very similar to the ES at the moment. For upside targets, we paused. This was basically yesterday's high. We paused there again, pre-market. See if we can pop that. And then above, we've got this gold box, would be a daily fair value gap with room all the way up to 311.75. If we're going to push to the downside, we've got this. This is on the 4-hour, I believe. Just a big open area here. We've got room down to 823.50. So yeah, if we fall out of this rising channel, kind of have to see what we get and then be targeting this area. If we jump over to the Russell, let's see. I mark up on the September contract. Yep, here we go. All right, so On the Russell, we had the inverse head and shoulders that I mentioned pre-market yesterday. That played out. We had this they left this tiny section of this weekly gap open yesterday, which we have now tagged and filled on the Russell. We had this hourly fair value gap that this pullback has now filled in. So if we need to continue to the downside, I'd be then looking to this fair value gap, which has room down to that 1906. And again, as I mentioned each day, this is the new week opening gap on the Russell, which was so small. I just highlighted it with this one line there. Also kind of set up in that sort of rising channel here on the Russell. And then this would be a weekly gap that was left below. So we've been kind of talking like if tech's running hot, the Russell needs to catch up kind of stuff. So I think it'll be a good watch, see how it plays out. We also had a lot of dark pool on the emerging markets ETF last night. Posted the dark pools there in the room. So we'll see what we get there. If we jump over to the individual tickers, we're going to be checking out Apple. Apple's been getting a lot of dark pool up in this area here.
Yeah, they slammed that 183 level, like just slammed it yesterday with dark pool. I think there's like 2 million shares sitting there from intraday.
Yep, and you can tell they've been watching the morning show, whoever's got those millions of dollars, because I already had this fib marked up. And let's see, Bender was saying yesterday that some of these other lines weren't showing up so good. So let's see what we can do. I'll just put them in green. So that's a big dark pool above 183.79. I didn't add anything additional for this fib, but this is what Hells is talking about, all those shares. So I would be looking for a pop of this 183.79 for upside. So we're sitting in this dark pool area now. So for downside, I'd be watching this 182.25. And then down here, we've got more dark pools coming in. We've got 180.95, 180.09 if we were to have to, push to the downside. Apple also kind of in this like rising setup here. So be watching, kind of see if they hold this trend line type of deal right there. Yeah, that's pretty good, I guess. So we'll see what we get. But we saw still longer term pretty bullish on Apple flow. So kind of going to just have to see what we get in the flow, but that kind of thing going on there on Apple. And then the other one was going to be AMD, which I noticed is going to need some adjustments to the triggers. So I had it stuck between this range, which was pretty aggressive, but I would probably adjust the call trigger to like where we stalled out there pre-market, which looks like we can just set it to a round number, just set it to 129 flat. And then I would use this fib as the put trigger here at 127.25 on AMD. Yeah, that sell off with their presentation seemed kind of like suspicious. So and they're clearly buying it back up pre-market. So I think it could be a good watch. But I think that's all I've got for today.
All right, very good, fellas. You got anything else you want to share? Talk about?
I don't think so. I was looking at the, I put on that trade on UWM, which is just that catch-up trade on the Russell. Mm-hmm. And, looking at here, I'll share this real quick. We got a couple minutes here. Just for anybody that's interested. All right. So this is the Russell futures here, and it's coming into a pretty, I would say a pretty tricky, what could be a tough zone here. You've got a pullback to the 618 here off of this move down. So if they're going to short it or sell it off, this is where they would look to do it. You have the 618 from this bigger move down is just a tad higher, about 15 points higher. 618 from this more recent move down, also right in this zone here. Last night in Discord, we were talking with Vibrational was in there sharing some charts and stuff, and we're just talking about how so many of these charts, like look at this, from the COVID low to ATH, pulled back 50% of that, right? And that's right in there is where it based and held. If this thing gets through this, let's say 1938, right in here, 36, something like that. If it gets through that, then it looks for these highs right here. Let me put a line right in here. So 1970, and then above that, you get 786, 1982, and then 2000. But just know that it's coming into this area, and this is going to be, in my opinion, this is kind of a tell in here if they're going to look to sell this back down, or if this momentum is going to continue. If it holds above 1900, they're going to push it through these levels in here. There's going to be some resistance, but then the next stop is that 1970 area. So that's it.
All right, very good. Thank you, Bender.
Yep.
Looking like a good trade. This is definitely one of those pivotal moments on it, but looking like a really nice trade for you. Good job.
We'll see.
All right.
Basically, at break even right now, but we got time on it.
Got time.
So we'll see.
We
Today
got
could make or break, at least in the short term.
But that's the thing. It's like, what is the messaging going to be? It's like I can't see. It doesn't matter what I can see or can't see. It doesn't fucking matter. The market's going to do what it wants. A lot of this has been really nonsensical. One, it's like with IWM selling off as hard as it did, kind of nonsensical, just to buy it right back up within a matter of days. Seems a little bit goofy. But shit's goofy. What are you going to do? Anyways, that's all I got. We got 7 minutes until open. Let's have a good day.
All right. See you soon.
Yeah.